Alright guys, I think we're live. I'm not sure, but if you see me live, you can actually write to me, because I'm still getting the hang of this thing called live broadcasting. Okay, we're definitely live, which is good. Okay, so we have the economic calendar here because I really wanted to see if there's going to be any news today. Today is Thursday. And there's going to be no news, actually. Okay, we did have some news. We did have jobless claims at 8:30 a.m., but there's going to be no other relevant or important news for today. I have no idea if the market is going to do anything, because just look at the huge thing that it did. It's just insane. Absolutely insane. Guys, is the audio okay? Is it still doubled like yesterday, or I don't know? You can write in the chat. I don't know, send a G from good in the chat if the audio is good. Okay, everything's good. Someone's writing. Okay, great. Okay, so there's been some movement today on the London session, and those of you who are in the RBV private chat, the Telegram chat, you guys saw there that I've explained the reasons for taking the trade, for taking the long that you see here, and also for taking the short. I did keep a runner till this low. It was just a tiny runner, 001, just like a micro lot. And I like to call these micro runners as confidence builders, because I really feel that they really build the confidence that I have in the system. And first of all, in myself. It's really important to have confidence in yourself, because it's just the thing that is going to make you take trades, no matter what your results from the previous days were. So it's very, very important, at least to me, to feel confident in the way that I see the market, and to feel confident in my ability to spot setups. Okay, someone's saying in the chat we should go to 29.17. Yeah, maybe we should. Who knows? We'll see. So, I don't know if there's anyone right now in the live that is not part of my private chat in Telegram. Someone says that my look is... Alex, your look changed a bit. My look changed. What do you mean? If I'm prettier, that's fine. It's possible that my look changed because I made a visit to the dentist yesterday, and I got new, I don't know how you call them, like rubber bands and everything for my braces, because I don't know if you guys know, but I'm wearing braces, and they're a pain in the ass, to be honest with you. And I might look a bit changed because I speak weird, because I'm in pain. Yeah. And also because maybe I didn't wash my hair. I don't know. Grand success, because this is the person who said that my look changed a bit. And I'm just wearing this thing on my head. Yeah. So you guys, okay, I was about to explain to you the reason why I took the two trades that you see here. First trade, which is the long that happened over here, it was a trade that I took on the 5 minutes. I think it's pretty obvious. We can see here that there was this SMT divergence, this one over here. And you guys know I explained to you yesterday, and if you didn't hear me explaining it, or if you were not part of yesterday's live stream, I'll just say it one more time. To me, the way in which I see SMT divergence is that if, for example, we're talking about a reversal SMT divergence, which in this case means that the asset that you want to trade, which in my case is gold, is making an SMT reversal divergence. What does that mean? It means that we should see gold creating a lower low, and silver should create a higher low, okay? And these lows, the two lows, should preferably be happening around the same time, around the same hour, right? Because remember what ICT always says, it's time and price. So price seems to be off, right? Because we're talking about two correlated pairs, and price is off because all of a sudden they're not correlated anymore. Why? Because one creates a lower low, but the other one doesn't. And it's time because these lows occur at the same time on one pair and on the other pair as well. Okay, so if you're seeing this, I will consider that the sell side liquidity that is taken by gold, right, by making that lower low, I'm going to assume that it's a sell side liquidity grab. If after creating the lower low, gold will create a BISI, a bullish fair value gap, which we can see in here that it did that. It's pretty obvious. And after this, what I want to see is I want to see gold rebalancing that fair value gap and then creating some form of support. If you guys didn't hear me yesterday, support to me is whenever price is going to create a bullish candle after a bearish candle. So it's like a rejection candle, right? It can be a rejection candle or just a support candle. In this case, let me zoom in so you guys will see. In this case, there was a tiny tap of that fair value gap over here, you see, with this candle. And I was explaining earlier in my private chat that the reason why I did not take the trade when that candle closed is because my stop loss would have been huge, right? So just imagine if I would have taken that trade, my entry would have been here and my stop loss should have been under that low over here. Now, why is that? Well, that is because this candle, this one, the bearish candle, this one, that's a bullish order block, okay? So since this would have been the entry candle, I'm so bad at drawing this one. Since this would have been the entry candle, the entry candle or any price action prior to the entry candle did not touch the bullish order block, right? So there might be a case, even though you do get an entry candle in here, there might be a case that price might actually want to go down and touch the order block, and you don't know whether that order block will respect, no, we don't know whether that order block will be respected or if it's just going to be turned into a breaker, bearish breaker, okay? So if I would enter the trade right here, right, then I would definitely increase without needing to do that. I would definitely increase my stop loss, okay? So I was telling you guys today that you don't have to increase your stop loss. You have two options. You either take the trade and you're okay with increasing with like a big stop loss, and of course you have the option to adjust your lot size, whatever. And then there's also the chance to wait. Maybe price is going to not necessarily touch the order block, but maybe just reject, rebalance the fair value gap a little deeper and then reject, okay? And at that point, maybe you would get like an entry candle that would allow you to have a slightly, like a buy at a slightly lower price, and therefore you would have a smaller stop loss. Today it happened so that price went lower, rebalanced the fair value gap lower, and then it also touched the order block, and then it rejected. Now, if we're going to look at the corresponding candle from silver, this one, the entry candle, which was the 12:50 a.m. New York time. Okay, so that candle, this one, which was our entry candle, corresponds to that candle on silver. And you can see that at that time, when we had the entry candle on gold, we also see that price created a new SMT divergence, which is this one over here. Okay, where we see what? We see that gold stops inside that fair value gap, right, creating a higher low, and then silver goes lower under that low and also under the low of the Asia session, creating a lower low. Okay, so this means to me at this point, I correlated this in my head with the following things. Prior to this, gold took sell side from the low of the Asia session, and then it created this fair value gap, right? In creating this fair value gap, so I have the SMT, and then the fair value gap confirms to me the fact that the SMT is valid, okay? That gold going under the low of the Asia session was just a liquidity sweep, and that there's a big chance that price will not want to go further to the downside, okay? And I also correlated this with the fact that this is the last swing high that took price down under the low of the Asia session, sweeping sell side liquidity. So at this point, price, not only that it created the SMT and also the fair value gap, but it also broke and closed above this high over here. So to me, at that point, that becomes what you guys call like a market structure shift, or I don't know, change of character, whatever. Okay, it's not a break of structure to me, because to me, a structure is only the high or the low of a session, the high or the low of a day, or the high or the low of a week, or whatever. Okay, so this high, it's not a session high, daily high, whatever, but it is a minor high, right? So seeing that price closes above it with fair value gap after creating an SMT divergence, which implies a bullish reversal for gold, to me, that means that my order flow already changed to bullish, right? And then this other smaller SMT that was created here with gold stopping inside the fair value gap, creating a higher low, and then silver going lower, creating a lower low. To me, at this point, it became extremely, extremely clear the fact that this is a bullish continuation divergence for gold, right? Whenever gold creates a higher low and silver creates a lower low, that's basically a bullish continuation divergence. So we had a liquidity sweep and then a market structure shift to the upside, and then price just rebalances the BISI that it left behind in creating the market structure shift, and then it starts to reject from it by creating a new SMT divergence, which this time is a bullish continuation divergence. So basically this other smaller divergence that happened here, the smaller SMT, is basically telling me, okay, whatever market structure shift happened here to the upside, I'm going to continue moving higher, okay, because it's a bullish continuation SMT. Okay, so, and obviously you guys already know that I usually aim for 2R. It's exactly what we got with this trade. And then after that, I took a short. The short was a trade that I had taken on the 1 minute chart. And the reason why I took that is because I noticed that silver took out this SMT this SMT buy side over here. This SMT buy side corresponds to this one, okay? Gold had not take that one. Gold did not take that one. And as a matter of fact, gold was staying inside this SIBI over here, okay? As silver was sweeping the buy side above that SMT area, gold was actually staying inside that fair value gap, right? So this is a bearish continuation divergence on a higher, like if you want, like on a bigger scale, okay? So at this point, I dropped down to the 1 minute. Some people ask me, well, when do you drop down to the 1 minute? I don't know, okay? I just I just drop down to the 1 minute whenever the 5 minute is not clear. So I'll go to the 1 minute so that you guys can see whatever was going on in here. Okay, so besides the fact that we were in a besides the fact that we were inside a bearish fair value gap, also creating an SMT divergence for gold to go down. Okay, we then created another SMT divergence in here, this one on the 1 minute. And at the same time, we can see here that gold had created another bearish fair value gap that it rejected off of. Okay, I didn't intend to wait for two bearish rejection candles to occur. It just happened. This also happens to be like a perfect RBV bearish setup. Whoever is a student of the normal RBV 1 minute setup knows what I'm talking about. These would have been our two entry confirmation candles, and this would have been a signature short setup with the low of the Asian session being the break of structure to the downside. Okay, and then price going up in here into premium, and then creating our 1 minute RBV bearish setup. Now, okay, this trade went out pretty nicely as well. Like I said, I did leave a runner, a tiny one, but it's my confidence builder. So let's go back in here and see what current price action is doing. Now, if I were to have an opinion about what might happen today, I wouldn't know where to start from. The only things that I would see at this point, let me just remove these drawings. The only thing that I would see at this point is that we have a new SMT going on, and that would be this one. So gold took out the low of the New York, the low of the New York session from yesterday, whereas silver did not. Okay, so this is like a bullish reversal divergence. Why? Because gold went lower, whereas silver did not. Okay, so I'm going to mark that area as being a sell side liquidity area. For anyone who is new here, to me, liquidity stands where former SMT happened. Now, I honestly don't have a bias for today, but like I said, what I see is that we did take sell side and then it started to go higher, creating fair value gaps, and you can see those pretty clear in here, right? Creating, respecting, then going higher, creating one more time, entering, respecting, going higher, then creating one more time, entering, respecting, going higher. Okay, so it's not really such a big deal to read price action if you read it from this perspective. SMT, fair value gaps, and then rejecting from the fair value gaps or not, right? It's not such a big deal. Now, what I also see is that there is a lot of buy side liquidity accumulated here. We have there, we have here, and if I'm going to zoom out, we'll probably see more, but it doesn't make sense because we're trying to trade intraday. Okay, someone's asking if I'm using an SMT indicator when putting lipstick on the charts. No, I don't use an SMT indicator. All the SMTs that you see here, I'm marking them manually. Your trade needed up going to buy side liquidity yesterday. Remember me, thanks. Yes, TJ, I remember you. I remember you. I remember you, and I'm assuming that right now your funded account is standing a little bit better than yesterday, because I remember that yesterday, if your trade was to flop, right, if that would have been a losing trade, you would have lost your funded account. Okay, guys, if you have questions, go ahead and ask them in the chat. Okay, help me fill this live stream with valuable content, because if I'm just gonna talk whatever goes through my mind, maybe it's not going to be helpful for many of you. Olivia, what times do you usually trade? Well, I usually trade the London session usually starting from, I don't know, maybe 1:30 a.m. New York. I live in Europe, by the way. So whenever it's 1 a.m. in New York, it's 8 a.m. where I'm at. And right now it's 4:22 p.m. where I'm at. So I know it's only 9:20 a.m. in New York, but yeah. So I usually trade, not necessarily trade because I don't aim to trade every day, but I do open charts usually at 1:30 a.m. New York, yeah, for the London session, and then for New York, it's gonna start happening every day from 9 a.m. New York, okay, because that's the reason why I'm doing these live streams. Okay, so if price action, Nivarex, I think I know you. If price action is bullish gold, and you get a bullish reversal SMT on gold, under what conditions would you engage? So price action is bullish, and I get a bullish reversal SMT on gold. Okay, so here's the thing. So in order for price on gold to be bullish, right? And then for me to get a bullish divergence SMT, it means that price on gold should have made some form of pullback, okay? And if I'm going to get like a bullish reversal SMT on gold, which means that gold will make a lower low, whereas silver will make a higher low, okay? It means that this pullback, this bearish pullback on gold, it's ending. That's what it means to me. So I would definitely engage, okay? You just have to interpret the SMT, the type of the SMT, whether it's a continuation or a reversal. You have to interpret it, or think about it in the context of your overall market structure, or in the context of your overall market direction. Okay, so if the overall direction on gold would be bullish, I could not get a bullish reversal SMT unless there was a bearish pullback, because in order for you to get a bullish reversal SMT, price has to be bearish somehow. It has to have been bearish somehow, okay? And in a bullish market, whenever price is bearish, it means that it was doing a pullback. I hope I answered your question. Chris, a lot of SMT used there during London session of both longs and shorts. Which one should be valid? So I'm going to say this again. An SMT, if we're talking about a reversal SMT, which means that gold will make a lower low and silver will make a higher low, the SMT will only be confirmed by price on gold creating a bullish fair value gap after creating the lower low. The fair value gap will confirm the fact that the SMT is valid. You don't trade only based off the fact that you have an SMT. You have to wait for the confirmation of that SMT, and whatever confirms the SMT, if we're talking about reversal SMT, it's going to be a bullish fair value gap. Okay, now and obviously then you have to wait for price to rebalance the fair value gap, and then wait for a support candle to form inside the fair value gap, and that would be your entry candle. Okay, now if we are talking, for example, about continuation SMT, so this means that gold would make a higher low, okay, and then silver will make a lower low. Wait, because you're not seeing anything. And then silver will make a lower low, okay. This means that you have the SMT, and as gold goes down in here, creating the higher low, and at the same time silver goes down in here creating the lower low, right? It means that when gold goes down in here, it's stopping into an existing fair value gap. Okay, so for a bullish continuation SMT, it means that I need to have an SMT, right? And then price goes down into it, stops in it, doesn't go lower, creates a higher low, rejects from the fair value gap, and then it creates the SMT. So first, in the case of a continuation SMT, I will first have the fair value gap. The validity of the fair value gap is going to be given to me by the formation or the future existence of a SMT. This means that you have to wait for silver to create a lower low and sweep sell side, and gold should not create a lower low. Gold should find support in the previous fair value gap in here. Okay, so I hope I answered your question. By the way, there was also a video on my YouTube where I explained this very well in much greater detail than just this. TJ is asking, do I use macros for my entry times or no? Macros, I'm assuming that you're talking about specific hours of the day, like for example, from, I would say, 9:50 to 10:10, right? If that's the case, then no, I usually don't. I just don't specifically look for macros. Sometimes I see that I'm opening a trade inside a macro, but I don't necessarily consider that to be like a necessity. I want to read your name in the chat as being Honey Badger. Am I correct in doing this? There's someone who's commenting here. HNYBDJR. Honey Badger, I think you want to call yourself. Okay. He's asking, while this week is NFP, for what are you paying attention to? For NFP. I actually forgot that we have non-farm payrolls tomorrow. So thanks for reminding me. What am I paying attention to? Usually I'm paying attention to whatever untapped liquidity I see on the 1 hour chart. Okay, so this is 1 hour chart for both pairs. And okay, so definitely very bullish, both pairs, right? There's untapped liquidity above the marketplace and definitely untapped liquidity under the current marketplace. So I don't know. I don't know what I would be paying attention to. Honestly, I don't know. I'm not really that good at analyzing higher time frames because I'm not that patient as you guys would think. I have patience in waiting for a 1 minute setup to be confirmed or a 5 minute setup to be confirmed, but I definitely would not be patient in waiting for an entry on the 1 hour chart or anything like that. So my analysis on the 1 hour is pretty simple. I look at daily highs and lows and consider those market structures, and also weekly highs and lows and consider those market structures. And I just look at the direction in which they're being broken lately. If they're being broken more to the upside, then my bias is bullish. If they're being broken more to the downside, then my bias is bearish. And then on the 1 hour chart, I also look at SMT divergences, right? Because like I said many times already, to me, as sell side and buy side stands wherever I see SMT. So obviously, if I'm going to mark an SMT buy side or sell side area on the 5 minutes or on the 15 minutes, it's obviously going to appear on the 1 hour chart as well. Okay. So for this week's NFP, I have no idea what to look for, honestly. What I usually do, I wait for the reaction after the news, or the news reaction, whatever that's going to be. Then I'm going to wait and see whether we're going to break that to the opposite side. And if price will break that to the opposite side, I'm just going to wait for a pullback and then take a trade. So just to give you like a visual representation of that, it would be that, I don't know, let's say that prior to the news, price is consolidating, whatever. Okay, and then the news drives price down to sweep sell side liquidity, right? And then I go to the 1 minute chart and I want to look at the 1 minute candle that was the first minute of the news, right? The first 1 minute candle reaction from the news. Okay, and let's say that that's let's say that's obviously going to be a bearish candle. Let's say that the high of that bearish candle is right up here. Okay, so then if I see that after that reaction, after the sell side was swept during the news or with the news, if I see that price is going to break above that candle, even if it's going to poke it by a fraction of a pip, it doesn't have to close above it, but it really has to poke above it. Okay, at least poke above it. Then if I see that, I'm going to consider that the move to the downside, the news reaction, was a fake out. Okay, and it only aimed to take sell side liquidity and to induce market participants to go short. So the fact that we're now breaking higher above that news candle that took sell side, Okay, to me, it's a sign that price will likely seek buy-side liquidity. Okay, and then I'll wait for a pullback under the 50% level of this price move that broke above the news candle. I want to see some form of fair value gap that it's already existing and price rejecting from that fair value gap. That's going to be my entry candle. And I'm basically just going to target untapped SMT liquidity, okay, that was created previously during the day or during the London session or whatever. So this is usually how I look at price action during days with high impact news. Okay, I don't make like an analysis that's gonna stick in my head, stick with me like for the 1 hour or the daily or the 4 hour, whatever. I usually don't do that. Mr. D, in my honest opinion, gold made its daily range, plus Friday is NFP, so perfect seek and destroy time now. Exactly what I'm thinking. Mr. D, you've put the dot on the letter I. It's a word that we have here in Romania. I don't know if it makes sense in English, but whatever. Okay, so yeah, I'm also thinking that we might not necessarily see whatever movement throughout the rest of the day. That's why when I first, I think that one of my first sentences when I started today's live stream was to say just this. Well, we did move quite a lot. There's no news today, so I'm not really sure if price is going to do anything noticeable, right? It might, but it might not. Anyway, for now, I just don't see anything. I'm not really interested in anything. And I don't know what I would want to see. I don't know, maybe I would be looking for some minor, okay, here's one quick thing that I see here. So I see this SMT divergence that happened here, okay? That happened like in between the sessions, okay? In between the London session and the New York session. So we can see that gold made a higher low, silver made a lower low, okay? So to me, at this point, this area becomes minor SMT sell side. Okay, and I'm going to mark this on both pairs because sometimes it happens so that one pair is going to take that liquidity and the other one will not. So this is going to be very easy for you to spot a new SMT going on. Okay, so maybe I think that what I would like to see at this point would be for me to take a long. It's really stretched, this idea. Maybe sweep sell side and then create a bullish fair value gap for me to take a long, and then consider that price might actually want to sweep all this buy side liquidity that I marked over here. And if it's not going to do that, then I really do not know what it might actually do further next. I honestly don't know. I don't think that I would necessarily look for a short setup, not right now, but I might look for a short setup if I'm going to see on the current price action, if I'm going to see an SMT that's going to form. And obviously, in order for me to take a short on gold, that would have to be either gold right now, it's going to make a push to the downside, and it's going to create a bearish fair value gap. And as gold will go up inside that fair value gap, and then it's going to reject off of it, silver will go higher, right? So this will coincide to this, okay? It's going to be happening during the same time. This move to the upside of gold inside the fair value gap is going to coincide. It's going to happen at the same time with silver creating a higher high, okay? And if gold will reject from that fair value gap, then I'm going to take a short. And this will be a bearish continuation SMT. Continuing bearish, as in it would obviously mean that this move to the downside that occurred on the London session was actually a break in market structure. And it actually was, according to my concepts, it was actually a break in market structure because that push to the downside broke a daily low, session lows. And yeah, it's basically, it is a break in market structure. Okay, so this is how I would look to take a short. The other way in which I would look to take a short would be to see gold creating a higher high, okay, and then a bearish fair value gap. and at the same time, silver would create a lower high. So basically, as gold will go up and create a higher high, during that same time, silver would create a lower high, okay? And then after that, gold would make a bearish fair value gap. And then it goes up into the fair value gap, and I want to see a rejection candle, okay? And that's when I would short. And to go long, like I said, I'm just, I would like to see a sell side sweep. And for now, I see sell side here. It might also happen so that gold will go under this low and then create a 1 minute fair value gap and then rebalance it and then go higher. Okay, so I would have gold creating a lower low, and this low would not be attacked by silver. Silver would be creating a higher low. But to be honest with you, I don't think that any of this is going to happen. I think that gold will just continue to push higher like this in a balanced way, right? Till the end of the day, or till the end of the session. I don't know. And I honestly don't think that we're going to get any entry today, but we'll see. Okay, so Mr. D, I'm totally into what you're saying. Wildly interesting concepts. Yes. Mike, Carol, Alex, are you using the RBV weekly and daily bias when trading SMT? And if so, how do you incorporate it? Thanks. No, I'm not. I'm not using. It's not mandatory. I mean, no. With what time frame you start your trading day? Usually 5 minutes. And if there's too much price action, because usually when I trade on the New York session, there's a lot of price action because I have Asia session and I also have the price action of the London session that is right here in front of me. So sometimes I might not see relevant price levels that Asia session or that London session visited during their time. And if that's so, then I'm just gonna go to 15, 30, or 1 hour until I actually see relevant levels or areas that the previous session visited. Okay, and I only mark one thing, SMTs. I don't mark anything else. Okay, just so you know. So it's really, really simple to make your analysis on whatever time frame whenever you're looking at just a few things. I don't know. Do you consider 4 hour and 1 hour fair value gaps and order blocks as points of interest? Definitely. I can do that. I do that sometimes, but it's not a must. It's not something mandatory. And what I mean by this is that sometimes if I'm going to see something happening on the 5 minutes, maybe price, it's not looking that clear, right? Then at that point, I want to go to a higher time frame, like 1 hour or daily or the 4 hour, and see whether we swept like an older low that it's not visible if I look on the 5 minute chart, because I don't know, maybe it's a low that it's 2 weeks old, so that entire price action would not fit in my screen. Also, some relevant 4 hour or daily fair value gaps, like there was a relevant daily fair value gap at one point. This one. Okay, this one. That's relevant, especially because there was also this low in here. Okay, so if I would go to the 5 minute during this candle's trading during that day, February 28th, I wouldn't see too much stuff going on, like in regards to where are we positioned, what levels from the left side, if I would only look at the 5 minute or 15 minutes, right? Because there's just a lot of price action in here. Like we're talking about price action starting from February 6th all the way till February 28th. So it's 3 weeks of price action that would simply not fit in a screen on the 5 minutes chart. Okay, so then I would definitely increase the time frame and see if there is something noticeable that's happening here on the 5 minute that I could correlate by taking place into a higher time frame PD array. Okay, I hope I answered your question. Yeah, just as I thought, it's just going to do this for the rest of the day. I think, without giving any sort of entry confirmation in the way in which I would want to see an entry confirmation. Now, you guys can say a lot of things, and yes, I agree that if I would have like a different approach to markets, so I could say that, well, look at this, it found support here at this previous resistance, or, well, this is a bullish breaker, so look at price rejecting from there, and right now it's doing the same thing from here. I could definitely do that and take a trade, but it's just not my cup of tea, because it just isn't. It isn't. Okay. Question from Ivan. Can you explain the previous SMTs as liquidity grab zones and zones where to actually look for these setups based on the bias, of course? I don't understand your question. Can you explain the previous SMTs as liquidity grab zones? Well, yeah, so just think about it. Okay, so I understand the question. So just think about it. There is SMT, right? It's basically what happens as a consequence of smart money intervention. This is what I believe. Okay? I don't have any proof to prove this, but it's just my own logic and the way that I consider that things are actually happening. Okay? So, to me, whenever there's abnormality going on in the market, that's smart money intervention. Okay? Abnormality, I would give the definition of market abnormality in this case as two normally correlated pairs starting to be uncorrelated. So gold and silver, when one goes up, the other one goes up, right? So if one creates a higher high, the other one should also do the same thing. If one of them is not doing the same thing, then that's basically manual intervention. That's basically abnormality. Okay? Why? Because they're not correlated anymore. Normally, they should both do the same thing, but right now they're not. Okay? So that's abnormality. So to me, that abnormality happens as a consequence of smart money intervention. So now, how is smart money intervening? What are they doing? I don't care what they're doing per se, but I want to discover why they're doing it. Okay? So if I'm going to see that, as in why, what do I mean by this? Why are they doing it? Like, did they go up, create a, what did I do? Did they, for example, go up, create a higher high on gold, but they did not create a higher high on silver? They created a lower high on silver. Did they do this, like breaking above that high? Is that a break in market structure to the upside? Because let's just consider that price was bullish so far, right? Is that a break in market structure? Okay, and this is just a pullback and price is actually going to continue to move higher, okay? Or was this a liquidity sweep? And right now, the buy side that was swept above there is being used to pair it with smart money short orders, okay? So if that SMT will be confirmed by a fair value gap, right? And then price is going to start to go down, then to me, that area, it's the ignition point, if you want, the beginning point of the smart money manual intervention. So just think about it like this. In order for them to go above that high and create the higher high, they needed to pump bullish orders in there. I'm just explaining this the most simple way I can. I might not use terms that some ICT lovers, let's just say this, not lovers, but I don't know, ICT adorers would approve of, like, smart money or buying, selling, buying pressure, selling pressure, whatever. I just want to use words that are simple to understand. I don't want to be correct, okay, from a semantic point of view. I want to be correct from a concept point of view, okay? So I just hope that if I'm going to say some terms that are unaccepted in the ICT world, I hope you guys will forgive me and you just actually go beyond that and just actually understand the logic that I'm explaining. Okay, now with that being said, let's continue. So think about it like this. In order for price to create that higher high, smart money had to, or there had to be some sort of buying occurring, right? Right? So if that's so, and then price right now gives signs of reversal, how? First the SMT, and then the SMT is confirmed by a bearish fair value gap that occurs here on the second price leg of the SMT. Okay? So to me, that's an indication that the buy side liquidity that was taken above that high is not going to be used to continue further to the upside. It's actually going to be used to pair with smart money short orders. Okay, so think about it. They pumped buy orders and then they just go down. Okay, and everyone who was going long in here thinking that price will continue to go higher. Why? Because there's a lot of traders who trade like this. Well, break in market structure, I'll wait for a pullback. Price will find support at this previous resistance, which is now broken and turned into support, and then price will go higher. Now, if this was a resistance, it would broke into the upside. Price will make a pullback, and then it's going to go higher. Okay, so there's a lot of market participants that trade like this. And I'm not talking retail market participants. I'm actually talking, I don't know, banks, institutions, whatever. I don't care. I really don't care. Okay. So the idea in here is that if there was some form of buying going on and it was a fake out that's being conferred by a later push to the downside and the fair value gap, the bearish fair value gap that's going to confirm the SMT, okay, to me, that's the ignition point of the intervention of smart money. And then I'm going to target like an older SMT area. Why? Because just as there was liquidity being pumped in the market here at the beginning of this SMT, there's also going to be some liquidity at a previous SMT that we had lower in here. So let's say that in the past, price in here on gold created a lower low, and on silver it created a higher low. So that would be a bullish reversal SMT. Okay, so the same thing would occur. It's the ignition point of smart money starting to take price in the opposite direction in which it was going previously. Okay, so if they're selling here, they will want to get out of the trades where they will find sell side. Where is that sell side going to be situated? Right there, where they started to go long initially. Okay, so you're going to go down. As price goes closer and closer to that area, I'm going to definitely consider it to taking profit, okay? Because as it gets closer to that area, it's not mandatory that it's actually going to sweep the area. Why? Well, it's very simple, because it might actually stop into this bullish breaker and just mitigate that and then continue to go higher. And it doesn't matter because I still had a tradable setup over here, okay? I hope I answered the question, and I hope it's a little more clear, Ivan. And if it's not, you can definitely say that in the chat, and I'll do my best to answer better. Okay, would you ever consider trading ES and NQ? I used to trade gold and Forex, but noticed ES and NQ move more smoothly towards PD arrays and intraday highs and lows. No, I wouldn't. Not for now. No, I wouldn't. The brokers in the description, are you still recommending them? Yes, I do. Definitely, I do. Do you have to be a Romanian to register with them? No, you don't. Also, if you trade gold on the 1 minute chart, wouldn't the spread affect a lot of your trade? No, because both RoboForex and both IC markets have the smallest spreads out there. And I can actually show you the spreads on RoboForex. This is the small account that I'm trading on Robo. Okay, and by the way, whenever you're opening an account with any broker, make sure that you're gonna open an ECN account. Okay, because otherwise you're not gonna get tight spreads, no matter what account type you're gonna use. You just have to use an ECN account. Okay, now, so the spread here, I think I have an indicator that shows the spread. Here it is, and you guys will be able to see the spread on gold. So you see here the spread is like 3 points, 4 points. So it's very small. 3-4 points means like the third part, third of a pip. Okay, so it's very small. With IC markets, it's pretty much the same. But with RoboForex, if you're gonna open an ECN account, your spreads are gonna be like minimal, and they have a good fill of orders, so you don't have to worry about that. And no, you don't have to be Romanian to register with them, so that's fine. Mohammed, hi Alex, for rejection, will you wait 2 candles to form as you taught us before? If it's 1 minute, usually. If it's 5 minutes, no. If it's 5 minutes with the SMT model, 1 candle will suffice. TJ, I'm switching between yours and Tanja's stream. I'm learning 100 times more here. I'm glad. Thank you. You can say that in Tanya's stream in the chat. Oh my god. No, actually don't do that. I would be such a horrible person. Just to ask you to do that. Don't do it. And then there's like a little devil in my head saying, yes, do it. Oh my god. How do you know the difference between a valid / strong fair value gap and an invalid fair value gap when using SMT? I don't know. You're just going to see it. Usually a valid or not valid, but like a strong fair value gap, it's just going to scream strength. It means that the body of the candle that creates the fair value gap is going to be visibly, notably bigger than the body of the previous 5 to 10 candles. So if we're going to look here, to answer, whose question was that? Obi had this question. So if we're going to look at this fair value gap here, okay, the fair value gap occurred on this candle's body, the 12:30 a.m. New York time. If I were to compare the body of that candle with the body of the previous 10 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, okay? So all of these previous candles, all of them are much smaller compared to the body of that candle where you see the fair value gap. So to me, that makes the fair value gap to be very strong. Okay, why? Because the candle that creates it is really showing volumes, right? And also if you pair that with the the existence of a SMT, poof, you have yourself a formula for success. Okay, look at silver going. I think gold will do the same thing. Oh my god, look at silver. Silver, you guys, it's going to collect all the buy side around here. I think it's really going to do this. Just look at it go. It's just insane. So silver right now took out that high, which is buy side, SMT buy side, and it's also the high of the London session, which coincides to this buy side area, which is also the high of the London session. I honestly do not think that any of these pairs is going to start to go down right now. I think that the buy side that silver takes out here, it's going to continue to go higher. It's going to be used as fuel to make price go even higher. That's what I think. And maybe it's not going to do that. And if it's not going to do that, then how could we benefit from that? Let's say that silver will start to reject from here. We're already seeing an SMT, don't we? So the London session high with the current level of price action, with London session high and current level of price action on silver. So definitely it's a bearish divergence. I would not look to see whether gold, for example, is rebalancing whatever fair value gap from the left side and it's going to reject off of it. I would not be interested to look at that on the 5 minute, okay? Neither would I care if it would reject from this and it would still be in a state of SMT, right? So just meaning that silver will reject from here and then gold, it's rejecting from whatever fair value gap to the left side. I would not consider that just a 5 minute entry candle confirmation, so in this case a 5 minute bearish candle, I would not consider that to be sufficient for me to take a short. Why? Because if I'm going to look at all these candles in here, there's just too much price action to look for, there's just too much price action in order for me to consider that price would rather form one bearish candle and then consider that as a reason to go down, okay, to continue to go down, and just ignore the fact that it's just very close to a buy side area, okay? And I would also have to ignore the fact that so far price has been bullish, okay, and it's just respecting a bullish order flow. And I would consider that one 5 minute bearish candle, okay, rejecting from a rather old fair value gap would actually be enough for me to take a short, right? So I would not consider at this point taking a short based on this SMT alone and whatever fair value gap we see to the left side of the chart. I would not consider sufficient to look for a trade on the 5 minute. It doesn't matter if silver is rejecting from here, okay? I would want to go to the 5 minute chart. And if I would go to, to a 15 minute chart, and if I would go to a 15-minute chart, then it would make more sense to me to consider that whatever fair value gap I see to the left side might actually be relevant, still be relevant for the current price action, and that it might make sense at this point for this to be just a pullback, and price might actually want to reject from this fair value gap and then go lower. But in order for me to consider this valid, I would want for price to create a 15-minute bearish candle as a rejection from a fair value gap to the left side, and then at the same time silver would also have to create a 15-minute, oh my god, why do I keep saying 5, a 15-minute bearish candle as a rejection from this buy side that it just took. Okay, to me, how old a fair value gap is given by how many candles ago did it occur, not how many hours ago. Because if I would go to a 1 hour chart, I could see a fair value gap that happened 2 hours ago. So it's not that long ago, right? If I would go to the 5 minutes chart, and let's say that inside that 1 hour of bearish fair value gap or whatever, I would also see a 5 minute fair value gap, okay, to the left side. That would have also occurred about 2 hours ago. So the time horizon, it's the same. But if we think in terms of how many candles ago did that happen, it's not the same anymore, because 2 hours ago on the 1 hour, I only look at 2 candles. But 2 hours ago on the 5 minute, I look at how many candles? I look at, I don't know, I look at 30 candles, I think, or more. How many 5 minute candles are there in 1 hour? There's 12. Right? Okay, so I'll look at 24 candles, okay, on the 5 minute compared to the 1 hour. If we look at this thing in here, okay, this happened at 2:20, okay, this price action, around 2 o'clock, 2 a.m. And right now it's 10 a.m. Okay, so it's 8 hours of price action. 8 hours of price action. On the 1 hour, this would make sense. Why? Because 8 hours ago, I'll only look at 8 candles on the 1 hour, okay? On the 15 minutes, it would also make sense because I would look at roughly around 30 candles, okay? But if I look on the 5 minute, I'm looking at 100 candles ago. 100 candles ago is not really that relevant anymore for whatever is going on right now with the current candle, okay? So the least candles have passed from the creation of whatever PD array you're looking at, okay? It's going to be much relevant for you to trade on that time frame that makes you look at lesser price action, okay? Not in terms of time horizon, because like I said, it's just going to be the same. The time when it happened is just 8 hours ago. But if I look at one time frame versus the other, it's going to make sense for me to wait for confirmation on a bigger time frame. Why? Because I would look at lesser price action, okay? Less number of candles. I hope it makes sense. This is a thing that I do, okay? So at this point, I would not consider that gold rejecting from a 5 minute fair value gap that happened 100 candles ago. I would not consider that that would be relevant for me to take a short. So I would definitely want to wait for a higher time frame confirmation for this. So if we could still stay in the state of an SMT, meaning what? Meaning that we would see gold not creating a higher high, okay, staying inside this 15-minute fair value gap and then creating a 15-minute bearish candle. So it means that we still have to wait for the current candle to close, okay, and it would have to close bearish, or maybe this one is just going to stop here and it's going to close like this, okay, and then the next one is going to be bearish and we're still going to be in a state of SMT. Then yes, I would consider taking a short on the 15-minute, having a 15-minute confirmation. Why? Because I'm only looking at lesser price action, like around 30 candles of price action, okay. Someone says, I'm favoring the top 30-minute bearish fair value gap aligned with OD for short. I don't know what's OD. The reason is that it's the OTE level. It might be. This level also taps into the 3-hour order block. Okay, 3-hour, 2-hour price action. Like, oh, let me check the 10 minutes. Let me check the 3 minutes. Guys, stop doing that. Okay, just use the normal time frames. Stop confusing yourself. I bet that if I go to 2 minutes, 6 minutes, 8 minutes, 8 hours, whatever, okay, I'm always going to find an opportunity to say, oh, I can go long or I can go short in here. But honestly, can I reproduce that with every single setup that I take? Just keep it simple and keep it consistent, okay? Be consistent with the time frame where you read your bias. Be consistent with the time frame where you take your entries. Be consistent with what type of setup you're going to use, what type of entry rules you're going to use. This is consistency, okay? If you're not being consistent with the things that you use, you will not know if the results that you get are, you know, the success that you're getting from using the same system over and over again, or it's just, well, this success came from this strategy and this win came from that strategy. How are you going to be able to build a trusted portfolio of trades knowing that a system works? You won't be able to do that, okay? 2 hours, 3 hours, 10 minutes, stop it. Just choose 1 or 2 time frames and that's it. Just stick to those, okay? Stick to those and that's it. Can people in the USA use those brokers? Unfortunately, no, they cannot. Okay, so we're not in a state of SMT anymore. Okay, and just like I assumed, silver is using that buy-sell liquidity to take price higher, and so is gold. Okay, and we didn't get any entry, or at least I didn't get any entry the way I would have wanted to get an entry. So that's perfectly fine. Now what I usually do is I'm going to remove all these SMT buy side, sell side levels from here. As soon as price goes through them, I just remove them from the chart. You should be able to open market watch and then show the spread that way. Yes, you're actually right. You're right. Oh my God. So TJ said that he's gonna go into Tanya's live stream and tell people from there to come here. Don't. Or yes, you might get banned. That's not nice to do. Don't you have to wait to see a CB forming on silver first for the SMT confirmation? No, I don't, because I'm not trading silver. I would want that if I would trade silver, but I'm not trading silver. To me, the confirmation that I could take a short on gold on a, if price wouldn't have gone, you know, above that high, and we would still be in a state of SMT. So gold creating a lower high, silver creating a higher high. I don't have to wait for silver to create a bearish SMT, because it's supposed that gold stops into an existing SMT from the left side and it's rejecting from there, okay? And I don't need that fair value gap to happen on silver. I would want that if I would want to trade silver, but I don't want to trade silver. So because I don't want to trade silver, I want to trade gold. To me, I have on gold an existing SMT and an existing fair value gap and an SMT. So SMT plus fair value gap plus SMT. That's the trade. Am I gonna stream regularly? Yes, I am. I am. Yes, sir. We're gonna see each other every day at 4 p.m. my time, 9 a.m. New York. Off topic, you live in New York now. I don't live in New York now. I don't live in New York. I don't. I live in my country, Romania. Beautiful. Bucharest, the capital. Just look at the sun out here. It's just really beautiful outside right now, today. And it's been all week really nice and sunny. TJ, if both pairs have swept, say, Asia highs, for example, and you're looking for shorts, Would you use the pair that struggles to make a higher high as it is weaker and confirms smart money may be reversing it? No, I wouldn't. If gold is the one that went above the high of the Asia session and silver did not, I would wait for gold to create a bearish fair value gap after sweeping Asia high, and then the rebalance of that fair value gap, and then I would go short. So no, I don't do that. I know that there's people who trade SMT like this. If you want to short, the weak pair, the one that's weaker. Weaker is going to be the one that's going to create a lower high. Okay, one that struggles to create a higher high, it's a weak one. I would not do that. No. I just look at the type of the SMT, reversal or continuation, and I just trade based on that. If it's a reversal SMT for gold, so gold creates a higher high, I'm going to wait for a fair value gap to form, and that fair value gap is going to confirm my SMT. And the fact that that higher high was just a liquidity sweep. I'm drinking through a straw because of my braces. You guys, I really can't believe. To me, it's fascinating. I don't know. I feel like a baby for finding such things as being so fascinating. But honestly, I'm fascinated by how fast this metal in my head works. I'm really fascinated. Because yesterday, I got the whole thing changed, rearranged, readapted to the new position of my teeth, whatever. Today, it already feels different. And it actually felt different since last night. I don't know, 3 hours into this thing, and everything's off already. So weird. Really weird. And you can seem like, I feel like a little duck. I could really imitate Daffy Duck right now. So weird. Oh my god. Okay, TJ, yes, but in terms of if both pairs have swept Asia highs, what would make you choose one pair over the other? If both pairs swept Asia high, I don't have an SMT. I don't. And if a bearish fair value gap would start to form on gold, like, just so you understand, I always trade gold. Okay? I would never choose to trade silver. Never. Even if I see the opportunity occurring on silver and not on gold, I would just not trade anything but gold. There's only 2 times when I opened a trade on silver, and that was by mistake. Okay? Because I was on my phone, and I didn't see that when I opened the trade, I was actually just opening it on silver because I was in the silver chart. I just didn't see that. So it happened 2 times, and 1 time was this week. And thank God it went in my favor, because initially it started to go a little against me, not too much. But the spread on silver is just insane. Whereas on gold, it's not. So yeah. Boom, boom, boom. I think we should play some music with the next streams. What do you guys think? Do you think that we should put music in the background? And if yes, what type of music? And if you guys also know some places where I could get royalty-free music from and put it inside the stream, I would really appreciate it if you would give me some recommendations. Guni Okuni, you also have braces because you know the feeling. It's horrible but fascinating at the same time to get braces, to have braces. Chris, I wasn't able to pay for your mentorship for the last 2 years, and this year somehow God made a miracle. You are here teaching live on gold. I appreciate it. Thank you. It's exactly the reason why I'm doing it. Because I honestly want to stop doing the live mentorships. I just want to focus more on live streams. I think it's also a good opportunity for me to become not even more disciplined, because I don't consider myself disciplined, but to become disciplined, I think it's a good opportunity because I have you, my public, to be accountable, to keep me accountable. So it's really good. Where do you look for these setups? Where do you look for these setups? Only on previous SMT buy sell liquidity and SSL, no bias, nothing, just a sweep and then wait for the setup. Yeah, SMT plus FVG. Exactly. SMT plus FVG. It's the thing for me. Okay, lo-fi music, relaxing music. Yes, maybe some Justin Bieber would be nice. Okay. Royalty free can be from YouTube. Okay, but from the royalty free music that I browsed through YouTube, like, I don't know if you're talking Art View. I don't know if you're talking about that music that you could add also in your videos or whatever. Because if that's the case, I don't really like it. But if I could add, like in OBS, the streaming software, if I could add as a source for audio, whatever YouTube video I would like that has lo-fi music, then yeah, that would be great. And if that would be like royalty free, would be great. Do you read any books for trading? The Chimp Paradox helped me. No, I don't read books like trading books, or I don't. I tried to read the playbook. I think it's called the playbook. Yeah, I tried to read it. Interesting, but it just didn't. I don't know. It didn't keep me hooked. I don't know why. But yeah, I do read books. I read books every day, every morning. It's like the first thing that I do after I wake up, brush my teeth, and feed my cats. Because I have 2 cats. So after that, I just make myself a coffee. And then I just read a few pages. And right now I'm reading a book. It's called The 4 Fears That Prevent Us from Being Ourselves. And it's amazing. Amazing. Like for example, today, just so I give you a little bit of context. Usually I don't, like I have a hard time waking up in the morning. I do it, but I have a hard time doing it. And today I read in this book that people who have a hard time waking up in the morning, they are usually afraid of being responsible for their adult life. And to be honest with you, I do admit having that fear. Because I am an adult, but I don't feel like one. I still feel like a child. I don't know. I feel like a teenager. Yeah, and it's really weird to have to provide for yourself, to have to put money on the table or food on the table, to have to make money to pay your bills, and to make sure that you cover basically for every need that you have, and that there's not another adult that's just taking care of all of that. It's weird. I don't know if I'm the only one having this sensation, but yeah, it's just me. LB said he took a continuation buy at the beginning of New York on gold. He then got out early at almost 2R because he saw a reversal SMT happening. You saw a reversal SMT happening. I'm assuming, LB, I'm assuming you saw this one. I think this is the one you saw. If I'm right, let me know in the chat. Yes, okay, so he confirmed. Okay, yes, true, but look at this. If this is a reversal, and this is a reversal SMT, okay? Reversal for gold, right? It means that Gold created a higher high, silver created a lower high, okay? In order for this S&P to be valid, you have to wait for it to become valid or to be validated by a bearish fair value gap that happens after gold made the higher high. So after gold went up in here, on this push to the downside, you have to wait for price to create a bearish fair value gap, and that confirms to you the validity of the SMT. But that did not happen. Now, maybe you went to the 1 minute and you saw that that did happen over here. And if you did that, then probably yes. Probably it's better that you got out of the trade. But remember, you did make profit. Be happy for that. And next time, just leave a runner, which is going to be your confidence builder. Yay! Okay. Is there something which I should have seen or done for next time to stay in the trade? Not really. Trust it. I don't know what else to say. If you took it on the 1 minute, then yes, having a bearish S&P reversal on the 1 minute, but being also confirmed by a fair value gap on the 1 minute, then yes, it would have made sense to get out of the trade. But if you took it on the 5 minute, it doesn't make sense to get out of the trade. Just my opinion on it. I don't know. Or at least don't get out with all the volume that you entered initially. Keep a runner. It's your confidence builder, okay? Just keep a runner. TJ, oh my God, guys, you are great. I like really entertaining the questions that you ask. So TJ is asking me if I struggle with dating, as female traders are normally very independent people, so you must have high expectations. I don't struggle with dating. No, I don't. I do not. Because I don't date. You don't struggle if you don't do it. No, guys, I'm in a relationship. It's okay. I don't struggle. I have a significant other, so I don't need to date. Okay. And yes, I do have high expectations, but not just because I am a female trader and I am very independent. Not because of that, okay? But because I give a lot. And I'm in a relationship, so I expect to receive a lot in return. And I'm not talking about like gifts or attention or not just that, but I'm also talking about having this drive towards betterment, I guess. I did a terrible job in my previous relationship with this. I hope I'm not gonna repeat it again, but too personal, so we're gonna stop here, okay? Okay, so it seems that I can have another browser for my music, YouTube royalty-free music, and then add it to okay, great, I'll do that. So next live stream, I don't know if we're gonna do a live stream tomorrow. If we're gonna have a live stream tomorrow, I'll let you know, and if we won't, I'll let you know. But if we're gonna have a live stream tomorrow, yes, then I'll play with that thing in OBS to add background music. There was a small bearish fair value gap on the 5 minute. No, there was not. Will be. There was not. You cannot consider this a bearish fair value gap. Please do not consider this a bearish fair value gap. Okay, just don't. Never. Just look at how much you have to stretch your chart in order to see that fair value gap. That's not. It's just not a fair value gap. Okay? It's not. So yeah, there was no 5 minute bearish fair value gap there. Looky, I got hooky. I would so much want to short this. And why would I want to short this? I'll go to the 15 minutes. Okay. I'm shorting this, and I'll explain to you later why. Okay. So my entry is at 2913.62. 2913.62. And I am shorting this, okay? 2913. Okay, around here. Stop loss. It's going to be a bit bigger, but whatever. And I'm going to let it run till this fair value gap. Not the whole thing, okay? Not the whole thing, though. So we are still in a state of SMT. I don't know if you guys can see, but this is my trade. Okay, I opened 2.5 lots. Oops. And right now it's running about 400 pips in profit. Now, the reason why we're shorting this is because the previous 15-minute candle that closed is like a rejection candle. Okay, and I'm not going to wait another 6.5 minutes for this current 15-minute candle to close, because then my entry would be too big. Like my stop loss would be too big. Okay, I'm also going to be looking to see what price is going to do once it reaches this high. Why? Because this could be like a flip zone. Okay, it could be a flip zone. Flip zone meaning that it might be a level where price is going to find support. Okay, so I definitely don't want that. Also, another thing that I'm looking at is this minor swing low here that we're sweeping, which coincides to this fair value gap on silver. You see that candle, 945, it's the same. I'm getting ready to close this if it goes above my break-even point. Okay, I'm not going to play with this thing. And this, I would consider it a plum. A plum to me is a inversion fair value gap, a bullish fair value gap that became invalidated. Okay, so 2.5 lots. I'm sitting at 400, almost $500 profit right now on my trade. Okay, it's going nice now. So I'm going to close 2.2 lots, I think. No, I'm going to close 2 lots if it goes to $500 in profit. Should go just a little lower. Okay, I got 500. Okay, and I'm keeping a half a standard lot open. So I made 1% on this trade. Okay, 1%. And I have half of lot still running, and I'm going to move stop loss at break even. 2913.55 is going to be my stop loss, because I really want to give it a little bit of buffer. Okay, that was fast. Okay, now I have half a lot. Okay, half a contract, and if this thing is going to go lower, I might take something off of it inside that 15-minute fair value gap, which would be here. Okay, and if I'm not going to see any rejection reaction from that 15-minute fair value gap, I'm not going to take anything from the trade, from the setup, and I'm just going to leave it to go to here, create a new low for the New York session. Yeah, it seems to somehow be rejecting from here. You see, from that area, because like I said, that's a previous SMT, and even though it was not validated by a bearish fair value gap, it's still an SMT. Okay, so that area at one point seemed as if it's creating a resistance, but then that resistance got broken to the upside. So now price might find support over here at this area. Okay, so that's why I wanted to pay attention to what price is doing right there. Okay. Woo. Now let's explain the trade. And by the way, I'm scalping. Okay, this is what being a scalper means. Being a scalper means you get in and out of the trade as fast as possible, and you just use more of the volume that you can use. Now, to explain the reason why I took this trade, it's the fact that we had SMT divergence with Asia high. Okay, gold did show rejection signs from this 15-minute fair value gap. It's the exact same thing that we discussed at the beginning, or at the beginning of the stream. Yeah, why I would take a short and how. And then we see that silver did go above the high of the Asia session. So we have a bearish continuation SMT divergence that is being confirmed somewhat on the 15 minutes. Okay, and remember I was saying I wouldn't want to wait for a confirmation on the 5-minute for a short like this based on whatever SMT, because I would consider it's too much price action. But looking on the 5-minute, on the 15-minute, this candle, the previous closed candle, did show signs of rejection. You guys, if I would have seen that earlier, I think I would have gotten in once the low of that candle would have been broken. So that would have been a very good entry level, and my entry would have been a little higher than it actually is. It would have been, so 1360, whatever, to 15. So that would have been about 15 pips a better entry. And yeah, my runner got stopped out at break even with $2.5 of profit. So I'm out of the trade for good. Okay, so for this thing, how much did we get? Let me go back here. So got in at 29.1362. Okay, 29.1362. Okay, and I got out with those two lots at 25 pips of profit, so $2.5 profit, like in the price of gold. 25 pips, I got out at 29.11. Okay, and this is where I got out with most of my trade. Okay, most of my position, and then the runner got stopped out at break even. And maybe, who knows, it's going to continue to go lower, but who the heck cares? If we go to the 1 minute here, I'm curious to see if the plum, so again, to explain what the plum is. The plum is inversion fair value gap. So to me, the plum is a bearish fair value gap. No, it's a bullish fair value gap that reversed, or that got invalidated, and it's now a bearish inversion fair value gap. And I call that a plum. And then the bearish fair value gaps that are being inversed, I call those blueberries. Don't ask me why. I think it's just because of the colors that I use for the fair value gaps. So I'm curious to see if this plum here on the 1 minute, if it looked better to take an entry. No, not really. Maybe here, maybe. If you look at it, there is some form of minor SMT here. You see? Because this high around here and that one, they coincide on both pairs, right? And we're basically getting a rejection from the 5-minute inversion fair value gap. Maybe on the 1 minute, I could have taken a better entry once this candle closed in here. So the 1020 candle. And my entry would have been at 29.16. Yeah, definitely. I could have done that. But look at how perfectly it started to react from that level. You see? From this one. The level I was fearing it was going to react off of. Okay. What you guys are saying now? The market got the best of me. Who? Why? I just shorted before you said you were going to enter the trade, and I passed from first leg of my prop firm. Well done. Congratulations. This was Sean Badger. Congratulations, Sean. Maybe target the SMT sell side. Yeah, it might target the SMT sell side, but I don't like the way the rejection on silver doesn't really look like a rejection anymore. I don't know. It seems like it's just meandering around. We'll see. But yeah, guys, I'm totally happy with the profit that I made today during the London session and today during this live stream. That's fine. I'm okay with taking 20, 30 pips and then leaving a runner to probably go to 2R. And if that runner is taken out at break even, I'm fine. Especially, I got out of the trade when I reached $500 profit with my 2 lots. First, because $500 to me is 1% from my challenge account. And I consider that to be a very good target for my trade. Second, I'm taking the trade on the 15 minutes. Okay, the 15-minute candle can fluctuate greatly, and it could actually get me off guard. I'm not used to trade the 15-minute. Not that I'm not used to, but I don't really enjoy taking a trade on the 15 minutes. Okay? Don't really enjoy doing that. Anyway. And why, you might ask, why, Alex, don't you enjoy taking a trade on the 15 minutes chart? I don't, simply because stop loss is bigger. You have to wait more for an entry confirmation. You have to wait more for your trade to reach somewhere, right? Whatever it's going to be, stop loss or take profit. I don't know. That's how I feel. The time frame where I feel best, it's 5 minutes at the moment. I just like 5 minutes. Okay. Well, you guys, I don't know if it still makes sense to stay into this live stream. If I would still be in a trade right now with my runner, which I'm not, because you can see it just tagged me out and then it just started moving lower again. Like I said, I would consider getting out at this 15-minute bullish fair value gap if I would see any lower time frame signs of rejection at that area. And then if I wouldn't, then it's probably just going to go sweep this area at least. Okay. Okay, you guys. Well, I don't know. I guess I'll talk to you tomorrow if we're going to have a live stream tomorrow. And if we're not going to have a live stream tomorrow, I'll let you know. And thanks for being here. Yeah. Bye.